The impending sale of income insurance to the German multinational Allianz has stirred significant controversy and public concern. Allianz announced on 17 July its intention to purchase 51% of Income Insurance's shares, offering 40.58 Singapore dollars per share, with a transaction value of 2.2 billion Singapore dollars. NTUC Enterprise, currently holding a 72.8% stake in Income Insurance, will remain a substantial shareholder but a minority if the sale proceeds. This move has sparked backlash, with critics fearing it may compromise Income's commitment to Singapore's workers. Notable Singaporean figures have expressed their reservations about the planned sale of NTUC Income to Allianz, arguing that the core values of NTUC Income and Fair Price should remain intact. Tan Sui Chieh, who served as NTUC Income CEO from 2007 to 2013, criticized the sale, emphasizing that it contradicts the commitments made to shareholders during the corporatization of income insurance in 2022. He highlighted the broken promise that NTUC Enterprise would remain the majority shareholder and called for a fairer distribution of equity gains for shareholders who invested before NTUC Enterprise's capital injection. Shareholders were told at the May 2022 annual general meeting that post-corporatization, NTUC Enterprise would continue to be the majority shareholder of the new company. In a Facebook post last week, Tan Sui Chieh quoted Allianz Group CEO Oliver Bate, who stated in a Business Times article, "We're not in Asia to buy top line, we want to build a resoundingly profitable business." He contrasted this with the values of NTUC Income under his and Tan Kin Leon's leadership, stating, "We maximized value to policyholders, but they must be sustainable and make business sense. We wanted to have as much reach to Singaporeans, not to maximize profits, but to maximize social impact." Tan Sui Chieh urged Singaporeans to speak up, saying, "I hope our leaders are making sound decisions to benefit Singaporeans in the long term. I hope things may still change if there is a public outcry. So speak up now, or forever hold your peace." Commenting on Tan Sui Chieh's post, former GIC economist Yeoh Lam Keong wrote, "To sell off controlling interest to Allianz, a profit-maximizing international financial firm, after achieving such a strong and sustainable financial and market position after decades of competent local trade union and government-linked ownership, is in my humble opinion a strategic policy error that needs serious reconsideration." In a Facebook post last Tuesday, Dr. Tommy Koh, Ambassador-at-Large at the Ministry of Foreign Affairs and Chairman of the Institute of Policy Studies, voiced his opposition to the proposed sale. Dr. Koh highlighted the origins of NTUC Income, stating, "Income started life as a cooperative of NTUC like Fair Price. The idea was to offer insurance to the people at affordable rates. A few years ago, it was made into a company and ceased to be a cooperative. Now we are told that it may be sold to a German insurance company." He further emphasized the social mission of NTUC Income, saying, "I don't think it's a good idea to sell Income. It was founded to serve a social purpose and a social need. They remain valid today. I wish to argue that Income and Fair Price should never be sold." NTUC Income, established in 1970, was created to provide insurance protection to the masses at a time when life insurance was primarily accessible only to the higher income group. In January 2022, NTUC Income announced plans to convert its legal structure from a cooperative to a company governed by the Companies Act, aiming to strengthen its position amidst growing industry competition. The corporatization was intended to provide NTUC Income with greater flexibility to raise funds for expansion and to offer more competitive products. The corporatization was completed on 1 September 2022. Amidst the controversy and vocal criticisms, missing from the picture is Seah Kian Peng, a People's Action Party Member of Parliament for Marine Parade, GRC, who served as the CEO of NTUC Fair Price from 2010 to 2022, and was the Group Chief Executive Officer of NTUC Enterprise until August 2023. He stepped down from his role at NTUC Enterprise in August 2023 to take up the position of Speaker of Parliament following the resignation of former Speaker Tan Chuan Jin. After his extramarital affair with a fellow People's Action Party Members of Parliament came to light. His silence on the matter is particularly conspicuous, given Seah held the role of CEO at NTUC Enterprise during the corporatization of NTUC Income in 2022, where assurances were made to shareholders about maintaining NTUC Enterprise's majority shareholding in Income Insurance. Seah's predecessor, Chieh, has come out to voice his disagreement with the sale.
So what about Seah?
Even though Seah left his appointment last year, his silence on the matter thus far leaves a significant gap in accountability. As someone who was at the helm during the time these commitments were made, his perspective and explanation are essential. Addressing the controversy is not only a matter of upholding the promises made to shareholders, but also reinforcing principles of good corporate governance and public trust. As a politician, Seah's responsibility to the public is heightened. The public deserves to understand the rationale behind Seah's considerations of allowing NTUC Income to corporatize and how they align with the commitments made to stakeholders.